Hey, what's up, guys? Node Investor here. Are we live? Are we finally live, ladies and gentlemen? I apologize for the technical difficulties as usual. Ever since switching over to this new setup, I've kind of broke it. So I apologize. Looks like there were several other events setting up here. So what I'm going to do is start posting some links here real quick so that way other folks can find us here, and then we will get started. I will do a full chart review, mess some things up. Your technical analysis is no match for the Trump tweets here. Oh man, so let me see here. Looks like there is still a handful of people waiting on the other setup from. Always a pleasure to have you. Okay, here we go. I got the link here. Where is my link? Who do we have in the house, by the way? UK in the house? Joe, hey, Joe. Joe knows with us. And there's, yeah, I got the chart up. I'm not doing anything, so if it looks like it's just nothing, that's why. 2 minutes in here. I'm trying to hurry up so that I get Norway in the house. All right. South Florida. It's been a while since I've been to Florida. It's probably been, I don't know. It's probably been a year now. Let me see here. All right. So I'm hoping that fixed it. Let me go and delete the other ones here and we'll do it. Germany, all right. Portugal in the house. All right, looks like it's live now, so it looks to be working. Thanks for being here. Latvia, wow, we got a lot of folks here. England, the UK. Did any of you guys watch that The Great Hack? It was on Netflix here, came out recently, talking about the Cambridge Analytica and, you know, Brexit and the Trump campaign and all that good stuff. I don't know. It wasn't quite what I expected. It was okay, I guess. But I just thought of that when I saw UK here. Italy, Montreal. All right. Romania. Get some Romanian friends. All right, my friends. Well, let's get to it. So what we're going to do today, I'm going to do it a little bit differently when we start doing the chart reviews. We'll see how it goes. See if you guys like it, and if you don't, just bear with me because I'm going to run through the whole live stream in this format just to try it a little bit different here. And what I'm going to be doing basically is looking at multiple charts at the same time. So I'll give you a little quick preview here. There's a little bit of a rhyme and reason to this here, but when we look at the charts on the left here, it's going to be the daily view. And so this is the daily time frame. It's going to be the same symbol, of course, across all three charts. But, you know, you're looking at the daily chart here, for example, here in the top right quadrant, it will be the 4-hour view, the 240 minutes, if you will. And then you got the 60-minute or the hourly chart here on the very bottom. And there's going to be a couple of different indicators on each one, mostly just moving averages. It's going to keep it pretty simple. On the daily chart, I do use the RSI and the MACD quite a bit here on the bottom. And then I've added this bull momentum index. It's a little bit of a proprietary indicator, but I do use that because I have developed some trading strategies, kind of automated strategies, if you will, to kind of that revolve around this indicator. And so there's these little tick marks on the chart. That's what that's going to represent. So I'll go into that in more detail. But first, let's take a look at the overall chart here. I want to start with just the Bitcoin view, the big picture view, which is always the most important thing. You always want to start with, you know, just kind of what's happening, big picture here. And here we got the daily view, you know, just kind of going back to about May timeframe. We had the big run up, of course. But since the big spike that we saw here, that parabolic move that nearly crossed $14,000, it's been just a choppy consolidation since then. Not surprising. I mean, the price went from basically, you know, 4,000 to 14,000 in 3 months, right? And so it was due for some consolidation. It wasn't a matter of if, it was a matter of when. How the consolidation played out is always the big picture here. We're not seeing we're missing a bit of the screen, not seeing the volume. Oh, really? Let me see. Oh, yeah, you're right. Okay. Let me go to the window here. I'm telling you, just getting started here, folks. Sorry about that. Oh, why is it chopping it off? Let me do this here real quick. Oh, there we go. There we go. And now I see. I once was blind, but now I see. All right. I'm hoping you can see that there. And let me see. Let me test it on the other window. You should be able to see all 3 time frames there. Okay. Thanks for letting me know. But since the time frame there, the consolidation here has really started to form this big symmetrical pattern on the daily time frame, which if you look at the weekly chart, right, the big picture, this is a bullish continuation pattern. Now, of course, it could go either way, especially on the daily chart. It's symmetrical, but because it's coming on the back of a very strong rally, price is consolidating, moving averages are catching up, you know, odds favor it will break to the upside, but it could go either way. So I'm going to be clear, I'm not going to guess it, but you know, if I'm looking at the long-term point of view, this looks like a healthy consolidation so far. All the textbook, you know, scenarios are there. You got the declining volume as price continues to consolidate and constrict here into a tighter range. Moving averages are catching up. It's still holding above, you know, some key breakout resistance levels and on and on. So all in all, it's looking pretty healthy from the longer term picture. Near term, yeah, it's been really choppy, sideways. I kind of was not surprised to see Q3 just kind of be the chop fest that we've seen here after such a strong, even Q1 was pretty good. Strong Q1 in the alts, strong Q2 in Bitcoin. Here we go in Q3. But the big picture is, if this is starting to set up, you know, this is going to begin to consolidate in a much narrower range as we approach the end of September, and going into Q4 we could see another big move. The big question is, you know, which way is that move going to go? Are we going to cross through that 15K mark, or is it going to be the shakeout and then the breakout? If we get the shakeout, you know, this big pattern is pointing to, if you do a measured move, it's pointing to like the 6Ks, but because of the broader bullish stance, I would think there's going to be some buying pressure showing up well before that if we do get the breakout shakeout. Now, looking at the most recent support levels, you can see there's higher lows starting to form here, and I've got a very faint line on this chart. That's the 100-day moving average, which is now caught up to price. So it's going to be interesting to see if that begins to hold as an area of support. You know, I'm not a stickler when it comes to moving averages. You know, if price just barely crosses underneath it, it's really more what's the direction of the moving average and where is price trading relative to the moving average. And you can see here it's been well above that 100-day moving average for quite some time. If it begins to change that tone, right, and we begin to see price break below and fail to start getting back above, you know, that starts to really paint a negative picture at that point. But for now, the big level of support I'm watching is more horizontal price support, and that's really these two little wicks that we saw, these most recent lows around that 9K mark, just above 9K. But we saw a retest of that last week when I did the live stream. We were just kicking off a little bit of a bounce, and I said, you know, in that last live stream, if you viewed that, you know, the upside target was between 10, 8, and 11K, and we almost hit that to the, I mean, we went to 10, 9, 30, which was a nice little projection there before we saw the big shakeout earlier this week. And here we are bouncing, making a higher low, and price is still holding below that 10 EMA on the daily. But if price rolls over from here, you know, I'm not so sure that this recent support around that 9K, you know, is going to really hold this time. And so you want to see price really hold above 9,500 here in the near term. If it starts to break below 9,500, the sellers are going to have a little bit of more pressure at that point. I think the sellers will have some momentum there, and the downward pressure will begin. So that's really the level I'm watching here. Now, it depends on how it plays out. You know, if it's one of those big wick shakeouts and then things take off, that's actually quite bullish because it takes out a lot of stops. You see the buyers quickly step back in. But just something to make note of. I mean, there's a little bit of downward pressure here. You could be seeing a double bottom, but 9,500 is really the key level for me. The big number is basically 9K, round number psychological. but don't want to see it really start to break into that lower 9Ks again. Here we are bouncing back into 10.4 and just a little bit of a choppy range within this realm here that we've been seeing this week. So this is what I was watching here this week. When we saw that bounce last week here, I pointed out that big reversal hammer on some very strong volume, and it wasn't a big bounce initially. In fact, I pretty much went offline after the live stream on Friday. I went off the grid, if you will, did some travel, was out in the woods, enjoying the fresh air, the cooler weather, and I did not check the charts for almost 3 days. And when I got back, it was like nothing had changed. I was like, oh, well, that's always nice. Price is basically back to where it was when I left. But then we saw that small breakout, and you can see the breakout, it pretty much just went straight to that target that I was looking at here. And it began to form this little bit of a rising wedge that we saw kind of going into this week. And, first off is how did what was the basis for that target? And it wasn't anything, scientific or anything. The target that I was looking for on the bounce was based on the EMAs on the daily chart, right? So I was looking for an oversold bounce into the 10 or the 22 EMA. There was also some strong horizontal price support at 11K, which was just a psychological round number. And then I thought if it really breaks 11K, maybe 11.2, but that's really stretching it considering where the moving averages were. And so that's how I got to that kind of 10.8, 11K number, which it landed right at 10.9. Now look at this. This is interesting. If you do a little bit of a measured move on this rising wedge from the breakpoint, you can see that there was a downside target of around 9,800, and that's where the bottom was found here this week. They saw a little bit of a wick there before we get in this bounce here. So it's always interesting to see when the technical analysis lines up. It doesn't happen all the time, but it's always interesting to see when things really start to line up there on some of these measured moves. And and if you're aggressive, then you kind of would buy into some of this when it starts to look like it's making it low, and you would keep your stop back here right at the most recent lows. Doing some Fibonacci analysis on the retracement, and again, this is 4-hour view. These are tiny wiggles within the bigger picture, right? So again, it's really more for those that are a little bit more active on the trading side of things. We did pull back. There wasn't really any fib levels there to be watching. Some of you guys did point out that on the bounce, on the pullback, it bounced right to that 50% mark on the bounce on the way up. So that's another level to be watching. So now that we've seen that play out here this week, that wedge finally broke. We broke below that trend line, kind of in a little bit of a range here, right? So the big break point was from 11.10.8, and it brought price quickly down to 9.8. So there's this $1,000 price range that we're seeing just kind of chop around here. But in the big picture, you could begin to see a little bit of a double bottom maybe forming within this. To me, it doesn't really have the double bottom signature per se, just because you would really want to see the the rise, the bounce on the first double bottom half right here, that first leg up, be a little bit steeper. This was kind of more of a grind. That's what formed that wedge, then the break lower, and maybe this could be a lower high. So just really in the chop zone within the bigger picture. We got this choppy sideways range, but again, zoom out, we're within this bigger symmetrical pattern. Within that, there's a lot of noise. There's certainly some trading opportunities within this broader pattern, but until we break out to the upside or the downside, that's really it, right? It's just going to be just chop and quick trades for the most part, unless you're holding longer term. If you're bullish, then I would look for these touches to the lows as potential places to add, and if you're bearish, you look at selling into the resistance line. So the next resistance line here would be around the mid $11,000 range, 11.4 or so, and that's really how you kind of trade these bounces between the patterns until it breaks out, and that's assuming you're trading at all, right? And so there's always a lot of different strategies. When we get into the charts, as I mentioned here, I'm going to be showing 3 different time frames at once. I'm doing this for a reason, right? To show you, because when we do technical analysis, so often people are asked questions like, hey, would you buy here or would you sell here? What do you think about this? And that's a really difficult question to answer because of a couple things. One, there's no basis for would you buy or would you sell here, because I don't know if you're already holding some. I don't know if you're looking to add. I don't know if you bought way at 3,000 and you're looking to take profits, or if you bought at 12,000 and you're looking at the bounce as a place to sell, right? So it's really difficult to answer that. And the other thing is, what's your strategy, right? Are you just a swing trader or position trader that holds for months? Or are you looking at charts like this, the 1 hour moves, and you're looking to capitalize on this quick $1,000 move to the upside, right? And there's everything in between, right? Every trader has a different strategy. And myself, right? I'll look at the daily chart for the broader approach. What's the bigger picture? But generally, I'm trading out of this time frame, right? I'm generally looking at 4 hour charts as my setup time frame. But when things are moving quick, or if I'm looking for just a quick trade, a day trade, if you want to call it that, maybe 1 to 2 days long, then I'm looking at this, right? I'm looking at these 1 hour charts, because on a 1 to 2 day trade, that's more than enough to kind of scalp that. You can go a little heavier, keep a tighter stop, that sort of thing. If you're looking at the bigger picture, obviously you can't keep a 1%, 2% stop, because the noise is just much wider than that. So I hope that makes sense in terms of the different time frames, the different strategies, and why it's kind of difficult to answer the question of where would you buy or sell. And generally the way I answer that is I look at what are the key price levels, right? What would be the signals for me to either buy or sell? And that's kind of how I approach these streams when you guys want to look at specific charts. So let's get back to the BTC here. So some questions on the Bitcoin chart here, and that's a good segue, right? The dominance potential reversal. And let's go over to that chart. So looking at the BTC dominance here, let me blow this up. Of course, it's been rising here over the last, however long it's been since the bottom in January of 20, or since the top in 2018, right? Alts have just been bludgeoned. If we go to the last year, and I made a comment to you yesterday. I was looking at that icon chart and just watching things really pop, and I was like, man, I hope we start to see more of this, because trading altcoins has just been really boring lately. I mean, it's mostly been the Bitcoin show. Yeah, you get the occasional spike, but for the most part, I mean, the altcoin trading hasn't been that great, that fun, really since probably March. And so just something to make note of there. But we are seeing this rise, and it's kind of pausing here right below that 69%. I read an interesting article yesterday, and they were talking about the BTC dominance. And this chart obviously is comprised of market cap valuations, which, as we know, you got to take that with a grain of salt, right? Market cap has a little asterisk next to it. The reason it does is because it's based on total supply multiplied by what's the latest trading price of a token. And there's some limitations to that, because if you have a token with a huge amount of supply, even if not all of it is on the float, meaning the founders or whatever have some that's not tradable, even then, right, it's still, you got to factor in the liquidity aspect to that. You'll see some names in the top 20 which have a big market cap, but if you look at the actual 24-hour or weekly trading volume, it's nowhere near the top 20, right? And so you got to factor that in, obviously to a point, right? But that's the whole thing with market cap based on valuation. There was an article that was talking about using some volume and liquidity metrics as a way to kind of calculate that. And basically the summary of the article was Bitcoin dominance is much higher than 68%, right? It's more closer to 80 or 90% because of the big volumes and the trading in liquidity compared to all of the other altcoins, even the top 50, right, or the top 100, relative to what Bitcoin sees trading volume wise. They don't compare. I mean, and you'll see it in some of these names, right? I'll look at some of the alert system, and I'll find a name that pops up sometimes, and then when I go to to the exchange to go look at it, I mean, the 24-hour volume on the exchange is ridiculous. It's like 50 BTC or something. And if you go to the order book, right, it's like not even moving. It's just kind of static. And I just won't trade those names. Even if the chart looks great, if there's no order flow, there's no liquidity, the spread alone will really hurt your potential there. And it's really hard to get in and out of the trade quickly without any sort of slippage or make any sort of meaningful size, right? Like I won't throw a whole BTC at something that trades tiny portions at a time, right? So liquidity is a huge factor, and especially if you're a big holder of a specific name, right? If you're holding a big coin and you try to start unloading some of that, and you can't go out on an order book and unload it without really taking a bad price for it, that's an issue. So it was an interesting article, and I think it makes a lot of sense. But in the big picture, of course, Bitcoin dominance, even at a market cap valuation, remains extremely high, right? I mean, 70%. When you think about that, put it in context, right? 70%. I mean, you look at the rest of the universe combined only makes up 30% of the crypto market space. And when you look at the ones that really drive this, right, the top 10 names, I mean, all of them combined, right? ETH, Bitcoin Cash, Litecoin, Ripple, right? They're like not even 20%. So it's interesting to show you just how big the Bitcoin valuation is. It's still the king crypto, and with the latest altcoin smackening that we've seen here, right? You look at names relative to Bitcoin. Everyone is slowly becoming a Bitcoin maximalist again. No one brags about all the bags they're holding on Twitter or YouTube. You don't see those videos anymore. The watch these 3 coins in March and watch these 3 coins in February, right? It's just kind of like, it's been brutal. And myself included, right? I mean, I'm not a altcoin maximalist by any means, but there was a lot of names that I was really hoping would have done better, and damn, I mean, look at these charts versus Bitcoin. It was the great sell-off, and it just continues to be the case for the most part. Like I said, there's certainly some small tradable rallies here, but a lot of these names are just being bludgeoned versus the BTC. Of course, there's going to be a bounce eventually, right? We'll get the strong bounces, the nice tradable bounces. You're seeing, a lot of this is driven by fundamentals and some of the project specific stuff, but you're seeing, like, for example, Icon had a nice little pop on some volume, and I remember the days when we used to get these big 30-40% squeezes on the regular, and so I'm thinking, eventually we'll get some of that. But the thing that will be different this time is the crop of names that will lead the way up, as is always the case, right? If you look at the 2017 rally, it wasn't the same names that led the 2015-16 stuff, right? And if you look at even 2018, right, we saw a bunch of new names in 2018 that weren't really the leaders in 17. And so that's just going to be the nature of Bitcoin and crypto. It's just going to be, what's the flavor of the month, flavor of the year, type of things. Is there going to be another ETH type of coin? Who knows? I mean, eventually, I think there's a lot of them already kind of in the works, but they're just not tradable right now. Most of them are, you bought into them on a private level. Things like Definity, for example, that will come on the scene eventually, but by the time they do, excuse me, the valuation will be way high, right? It's going to be your typical, the VCs make all the money, and by the time it rolls out to the public, you certainly are getting in much later than the big money crowd. Thank you, SEC, for taking care of us, the little guys. All right, let's take a look at some other charts here. So we talked BTC here. One thing I want to note before I go off the charts here, and let's close out the BTC dominance here. Looking at CNBC today, if you missed it, you got to check this out, this tweet. It was kind of hilarious. They were talking about Libra. There's been some backers of Libra kind of saying, I'm going to distance myself a little bit because regulatory pressures and the anti-Facebook movement that we've seen here, and data and all that good stuff. So they were talking about Libra, and these guys were debating about why it's not that good. It's going to be basically Zucks getting your financial data on top of everything else. But the funny part was at the very end, I hate to call her out, but she was saying, "Oh, did you know Bitcoin could be hacked now?" Let's listen to that real quick.
There's some papers. For Bitcoin to become. Wait, have you talked about how there's apparently they've now established that Bitcoin can be hacked? Not how it will or whether it will, but just that it can be. And
you mean the
there's something making the I don't know. I don't follow.
The blockchain can be.
So I'm told from my Bitcoin guy that they're all paying attention to this.
So what did he sell everything or something?
I don't think he owns it in the first.
Oh. So there you have it, folks. You heard it here first. Oh, gotta love it. This space is just so comical sometimes. Thank you, CNBC, for the entertainment. So let's get to the charts here. Looking at the charts, like I said, I'm going to do the triple screening here, so we'll do that. That'll help us kind of get through the charts a little bit faster. And so basically the way I'm going to do it, I'm going to start on the daily chart here, the one on the left. I'm going to kind of get the bigger picture, the trend. Obviously, we know for most alts, that's going to probably still not be too hot. And then I'll go to the 4-hour chart, and then for those that are looking at the 1-hour views, maybe the quick trades, I'll look at that. And sometimes the 1-hour views are probably the better ones. And for example, if we look at something like Cardano, right? The daily chart just looks ugly, right? And you look at the the RSI and all that. Yeah, it's bouncing off of oversold conditions, but I mean, still trading below moving averages. Moving averages are still heading south. Yeah, there's a little bit of a sign of maybe there's a low being placed, but there's not a lot of convincing, hey, that's the low at this point. And so in that scenario, you'd look at something a little bit shorter time frame. For me, for example, that's how I would be trading it. I'd be looking at the 1-hour charts, or maybe even the 4-hour charts as a guide, and going from there. So that's going to be, that's where the scenarios will differ. Sometimes the 4-hour view is the better setup, and you just trade with the wider stop, smaller position. Sometimes the 1-hour chart is saying, hey, this is kind of a good little scalp. And so, for example, you could have done that with Cardano here if you were taking some of these signals, right? That was a quick 10% move on the hourly charts. Obviously, now it's pulled back some. So there's certainly different strategies with different time frames, depending on how active you are and how big of a position size you're willing to take. All that good stuff. Yes, smash the likes. All right, so let's see here. I'm going to keep a list of charts that we look at, so that way, for those of you that are joining later, you can I can go through the list and see what we had here. What else is real quick? Oh, before we get off this, sorry, chopping around here. What other news was it? We saw the fake Satoshi news this week. That was kind of funny, but not really worth spending too much time on. Stocks, Forex, gold. So check this out. The stock market, and rarely do I say thank you, Trump, but thank you, Trump, because I just happened to be short a couple of positions, and then the tweet came out, about Trump's. First, there was China is going to retaliate on the tariffs. That caused a little bit of fluctuation. Jay Powell was also speaking, and then Trump started coming out and really hammering on, who's the enemy here, the Fed or China? And he started talking about how he's going to order businesses to, look at their supply chain and all that stuff. And then it was just like bombs away after that. It was just the big sell-off. And I just happened to be in a couple of positions, one of which was going against me when the news kind of broke, and I was like, yeah. And so that was Home Depot, was short Home Depot there. Got a lucky break on that, cleared out of that one. Some retail names here. Dick's was already looking weak, so the short was already working. The Trump tweet just really helped, and so took that. And you saw the overall market just kind of see a very quick spike. It was bouncing up earlier here, and then just the news came out, and bam, the quick smackdown, and then it's pretty much been just kind of the grind ever since then. But I was done after that. It was like, when you get that kind of a move, you made your day, you get out of the way, and you call it a day, right? I was like, I'm not going to start the charts for the next 4 hours. Screw that. I was like, you see that big spike to the bottom, book it, take the money and run. Don't start over trading. So, but yeah, that was it. So the Trump tweet came out, caused that, but you saw that reverberate in many other markets. So for example, if you're looking at the Dixie here, the US dollar index, and you look compared to some of these others, right? This is the Forex market, right? So you saw the euro get smacked, the dollar versus the yen get smacked, and just across the board, that kind of news, the power of a tweet, just really rocked the overall markets. And then you saw the gold market spike here as well, right? So we were watching gold look like it was kind of pausing a little bit, and then that tweet came out here, and the whole news of that, and just bang, big spike in gold. You're seeing names like the GDX, the GDXJ have very strong names. Generally, when I trade that kind of stuff, I'll use the leverage ETF, so something like the Nugget, which had a very nice day, up about 12% on the day. And so this makes for definitely some good tradable stuff here. If you're looking at the broader markets with all the the chaos. I mean, it's just one day it's up, one day it's down, one day it's we're great, one day it's back to tariffs, and so you just never know. Is it a good time to load up on gold and silver? I've been bullish on gold this year just because it's been breaking out of this pattern here. Is it a good time to load up here? I think it's higher risk now, but there's some big fundamental catalysts certainly helping the markets. But let's go to the weekly chart real quick. This is what I was watching here, this broader pattern here, and finally breaking out. There was some good trades kind of going into 2018, right? August of 2018 really was the low. Kicked off a nice rally into February, pulled back, and here we are, this big breakout over that $1,400 mark. Really, 1380 kind of was the level to be watching here. My target on this move up was around 1550. We're getting pretty close to that, so it'd be nice to see a little bit of a pause in and around here, maybe set up a new base from which it could really get going on a longer term rally. But near term, it's still looking good. Silver's the laggard. Has been playing a little bit of catch up here lately. Let's go back to the weekly chart. You can see silver did find a low around that $13 mark, bouncing a little bit. Certainly not nearly as strong as gold, but that's mostly because gold is kind of the currency, the anti-currency, and so it's benefiting early on. But we'll see if silver plays a little bit of catch up. So all in all, crazy times in the markets. Everything's just kind of moving. Even Bitcoin kind of reacted to that news. If we really zoom in here. This small spike that we saw here on the hourly charts, that corresponded with that other action that we saw in stocks and in Forex and the precious metals markets. So always interesting to see that here. Okay, anyway, that was my little segue. Let's get to the charts here. What are some of the names that are popping up on our list today here? I'm going to go to I saw some power pivots. Power pivots are nice from the lows just because they're kind of pre-signals, some names that have been strong already. We saw 0x strong here. Waves has been strong, added to a Kraken here recently. Basic Attention has been strong, so let's kind of look through some of these here. Monero did a power pivot. A lot of these are USD, so that's mostly Bitcoin driving some of that. Oh, NEM. Look at NEM. Let's see here. Some of the names, I'm going to skip through some of these. There's Zcoin and stuff like that. I'm not going to really spend too much time on yet. Dash, BNB, dollar. All right, what's on the move? Let's go to the on the move names here real quick. I'm just going to start curating a small list of some names for us to go through, and then I will certainly start taking a look at your guys' names. Normally I'll kind of just walk down the big cap names first, but let's just jump around here a little bit. Jump around! Remember that? Golem. Oh my god, there's a name from yesteryear. Mana, Waves. All right, so let's get to it here. Looking at the charts here first, I'm going to start with the bigger names that are kind of moving that I was liking here. Let's start with Icon. Yesterday was on the move. There was, again, some fundamental catalysts that were driving that. And Icon, I mean, if you look at the big picture of Icon, right, we all know Icon has been brutal. Here's the daily chart on the left, and just been straight down. Massive volume spike here yesterday on that daily chart, breaking above some resistance here in the near term. Going to that 4-hour view. A lot of charts were forming a similar pattern here on the 4-hour view in that they were kind of finding that low here early August, made a higher low here recently, kind of wedging into this horizontal support level. And of course, Icon was one of the first movers out of the gate, breaking above. Potentially a little bit of a pullback entry here. You look at the 1-hour chart here, still marching higher. As long as it holds above that 200 level on the BTC pair, I'd be watching that. If you go to the ICX dollar pair, looking at here, it's still above the 10 EMA. Pullbacks are that 22 cents, maybe 20.5 cents. It's going to be the level to be watching. It's consolidating right now on this hourly chart, so if it breaks out above some of this resistance, right, that could kind of kick off the next leg. So just a little bit of a range to be watching there on the ICX USD pair. And that's probably the better pair for me. I'd be coming in from this angle if I took a trade on ICX. So there's that. Waves is probably one of the better names here today. Let's go to Waves dollar first here. This is Waves dollar on Binance. Again, not a very pretty chart there. And Waves has been ugly for a long time. But showing a little bit of action here as it kind of popped above some near-term resistance here. If we go to the the levels to be watching, right? The little breakouts, similar price action, just like we've seen on a lot of these, where you kind of have that little wedge forming here on the hourly. It's just really choppy here today, but was certainly moving strongly yesterday. Going to BAT, basic attention. I'm going to move quickly here, guys. BAT BTC here again, daily chart on the left. Not anything to write home about yet. But here on the 4-hour view, I like the 4-hour view on BAT because, you know, it did finally break out above some resistance, and I'm watching this pullback as a potential pullback entry point here, and that's really the idea, the level I'd be wanting to see it hold, right? It could breach the line a little bit. There's a 22 EMA just below the line, but don't want to see it get much below this. Look at the volume on the pullback, very light compared to some of the rise volume here. So I'd either be watching the hourly chart or that 4-hour chart on this guy here for a potential trade. Breaking above that trend line on the hourlies, that'd probably do it for me. If you go to BAT USD, you know, looking a little bit better, but the daily chart, again, it's just a bounce right in that 22 EMA. And so most of these alts, right, I've been seeing a lot of alt season commentary again. We had one good day of alts, and now it's alt season. So just, you know, just be careful. I mean, it's hard to not FOMO when suddenly you're seeing, you know, Ethereum Classic and Icon move as much as they did in a percentage, but you got to fight the FOMO sometimes. Again, it just depends on your strategy, right? If you're trading the hourly charts, there's trades to be had, right? If you're trading the big daily charts, there's no sign of a confirmed low yet. There's potentials, but again, we've seen it back here where you saw those bounces, and that's really all they were, and then you saw another lower low. So just, you know, be cautious there. On the good side, though, a lot of charts are starting to do this here. Maybe hard to see. Let me expand the RSI there. Whoops. So for those of you that are familiar with divergences, right, you have a bullish divergence starting to form on a lot of these charts, where you had that spike low here in middle July, you had the rally. Many charts have made new relative lows, but the daily RSI and the daily MACD histogram is not confirming that new low, and that's a positive sign. It's not always a buy signal in and of itself, but it's certainly a positive sign that signifies, hey, maybe the selling momentum is starting to wane here a little bit. Time to start paying attention for some potential reversals, potential bounces, especially where you're seeing these spikes off the low with the volume kicking in, the buying volume. You know, those are good signs if you're looking for, you know, the longer term picture that, hey, maybe the selling pressure is done for now. We're due for a little bit of a bounce action. That's what we all want to see. It's been a while since we've seen a good alt rally, so we'll see where we're going. But my point is, not quite there yet. Okay. Yeah, bullish divergence on that guy there. Let me see here. What was some of the 0x? Again, 0x looking pretty strong. Let's go to 0x dollar on Coinbase. Again, long-term chart, right? Pretty rough looking there. Big spike into oversold territory. Seeing a bounce here today. And 4-hour view looking like maybe there's a little bit of a low being formed. You're seeing this, you know, double bottom type of action. Attempts to break above resistance. 0x is looking a lot better here. About an hour and a half ago, it was up in the green, breaking out. Looks like it's pulling right back in here, and so I'd be watching that here on the hourly charts. Again, that's the level to be watching. Basically 18 cents on the 0x USD pair on Coinbase. Pull back to that zone that kind of holds and bounces off would be ideal, but again, daily chart looking pretty rough. Not a long-term bag addition yet. Oh, one of these days, right? People will start posting about all their bags soon. Not quite there. Let's see here. Cardano, ETH. Oh, NEM. NEM was on the alerts. Let me see what that looks like. It's like, why was NEM on the alerts here? Doesn't look very nice. Let me hop over to this chart real quick here. Daily chart. Yeesh. Let's move on. Yeesh. All right. I'm going to start with some of the bigger names here. Looking at ETH. ETH dollar here first. So ETH USD. Of course, Ethereum has not been the best price action here as of late, basically since this most recent top we saw. Certainly has continued to underperform. Bitcoin on the way down. Still making lower lows and lower highs here on this daily USD pair. 10 EMA, still trading below the 22 EMA and heading south. But, you know, there was that potential reversal attempt that we saw last week along with Bitcoin. But again, underperforming Bitcoin for now. What I'd like to see here, going to that 4-hour view real quick here, breaking above that 200 level again would be positive. And it's close, right? That'd be kind of the first turning of the corner here. If you look at it on the daily chart, 205 is probably a better level to start holding above on that daily chart. But you know, that again give you an idea. So 200, 205, in and around there. If it starts to turn that corner, and again, this is similar price action to some of these other names where they're kind of wedging up here, right? You got this low that we saw last week, a rally, the pullback, the higher low, and they're starting to really kind of wedge within these two bounds. So it's going to be interesting to see how many of those really break out, or if that just turns into a little bit of a bear flag that starts to roll over here. Looking at NEO was another one that was showing some similar price action. NEO BTC here. There's the 4-hour chart here. A little bit of a wedge starting to form, so looking for that breakout over that 985 level. Daily chart, not so pretty yet. Got to see that breakout here. Hourly just kind of pulling back here. NEO USD. Yeah, NEO dollar. Here we go. I'll go on Tether and Binance here. Daily chart. Yeesh, $9. Is there a divergence here? No, not a whole lot. Just above 1020. Starts to look a little bit better, like maybe that was a double bottom, but for now, that's the resistance level to be watching on the way up here. BTC death cross at 4-hour chart. I'll go look at that. What moving averages are you talking about when you say death cross? All right, let's see here. Litecoin, remember that one, guys? Litecoin, they did a halving here recently. Litecoin USD, where are we at? $75. Finding a little bit of a low around that $70 mark here. Not a whole lot of exciting things on the RSI front here. Looking at it from the 4-hour chart, a little bit of a bounce right into that 50 EMA on that 4-hour chart here. You know, there's, man, so many of these charts, even though it looks like, yeah, maybe there's a double bottom here or a little bit of a low trying to be established, you know, the big picture is just still pretty rough, right? The momentum is still downward, and I got to see a little bit more convincing before I start saying, yeah, I'm interested in here. And like I mentioned in the last stream, right, like, I'm okay not getting the exact bottom. You don't need to say, oh, I was the one who bought it at $70. I bought it at $69.50, right? Like, yeah, I'm not interested in nailing the exact bottom or the exact top, right? The point is to be in at the right time, at the best time, right? When the momentum is in the favor of the direction of your trade. And when it starts to pause or get out of the way, right, then you're done, right? Just because there's a psychological cost, right? Psychological capital. And if you have open positions, you've got to think about them, and you're looking at changing stops, and you're looking at, should I book gains? And, you know, you want to save that energy for when we're not in this chop type of action, but when things are moving and there's more momentum, and then you can really, really double down on the bigger moves, right? So that's all I'm saying. But eventually they'll break up. Eventually. So yeah, the question on the BTC signals here, I'm working on trying to automate those here and distribute them. At this point, they're not available, and the reason is because they're based off of this proprietary or removed from the list that has access to this indicator, which, no offense, I just don't have any interest in doing that, in managing that. At this point, you know, so that's the idea, is I'm going to find a way to automate the alerts so that way when there's a buy or sell signal, it'll be alerted. Right now, the BMI is available on the node insiders index, and that's what this is here. So like 4-hour BMI is at 90, 12 hours at 65, the daily is at 30. This index here on the left, this combined BMI market, is basically a matrix, looks at the 4-hour and the daily BMI, combines the two and comes up with a reading here. And these cards, these alert cards, right? So if you look at Raven, for example, here, there is a BMI value calculated for every single altcoin. This is the 4-hour BMI. And so, you know, it is available loosely for, you know, in different ways, but not exactly in the way that you're asking in terms of, can I put that on my chart? Not yet. Until I can find an easier way to manage that. Not yet. Some of you guys might know how, so feel free to make some suggestions if there's a way to do that. All right, so Raven, speaking of Raven, let's go look at that. the Raven coin. So those of you guys that are familiar with T0, right? Overstock.com starting an exchange. They had looked at other things, security tokens and all that. They had two coins that they were putting on their exchange first, Bitcoin and Ethereum. No surprise there. And then they added coin number 3, Raven. Raven? Interesting. But you know, the founder of Overstock is a believer in Raven and the technology, and so that was kind of one of the coins that they decided to add on there. So it has been in play a little bit. Now it's interesting because Overstock.com CEO did resign yesterday based on some political noise and things that he said that people didn't like, and now there you go, you got to resign. So that's going on there. But looking at Raven, this one's looking interesting here. It is starting to edge out above some resistance here on the BTC pair, showing a little positive action. Volume on the daily chart is also looking better as it's trying to turn the corner here at the most recent lows. Some volumes coming in here. So all in all, not too bad here. The 1 hour chart, I mean, again, this is pretty wide and loose here. It doesn't trade very cleanly here. Just it's a lower cap, lower volume name, but 1 hour chart is starting to trend higher. So definitely one to watch here in the near term. It is showing up on the alerts as well. So was on the move. It's got a BMI of 95. So all in all, can't complain, all things considering, in the alt land. Whistleblowing making Raven pumping up, is he? Interesting. I'm not following it that closely. I saw the blurb yesterday when he announced that he was done, and of course you saw, you know, Overstock spike and then drop. It was always interesting to see how that played out here. And it was kind of a delayed reaction, which was the interesting part, right? I was on a stock chat room, and the news broke of him resigning here. I was like, oh, that's interesting. And it was just kind of like up, down, up, down, up, down. And then, you know, then it just like had that big spike. So it was kind of one of those delayed reactions. Okay, what else? Let's go take a look at a couple other ones here. I'm going to go to BTC here. There's a question on the death cross. And it looks like you were looking at the 50 and the 200 on the 4 hour charts. Okay, so okay, no, that's fine. Here's what I got on my 4 hour chart. I've got the 100-day, which is here, or the, excuse me, that's the 5-minute chart. The 100 period, which is here, which is rolling down. The 2 hour. I don't have the 50 shown, and I'm just not a big follower of golden crosses, death crosses, to be honest with you. There was a big hoopla last year, if you guys remember. Everyone was talking about the death cross. This was well into the bear market, and I even made a video on it, right? Because my whole point was, like, if you're waiting for the death cross to kind of give you your signal whether buy or sell, like, you're way late to the game already at that point. And so I'm just not a big follower. You know, they certainly help confirm what you're seeing in the price action, but very rarely are kind of the trigger or the inflection for me, right? That's just me. It's a little bit of a lagging indicator in a lot of ways. Now I do, you know, like here for example on this bottom chart, this is a moving average crossover strategy here. So if we go to BTC, I'll kind of explain this one here real quick. And it's a simple strategy. I mean, you could set something like this up yourself. Actually, let's go to the big chart so you guys can see it real quick. Let me hide all this noise. And this is kind of a good segue into kind of strategies and all that good stuff here. So let's go to that here. And you know, so what you have here is these blue purple lines here, right? That's 3 moving averages, and the exact number that you use is not really that big of a deal. You can use a different combination of numbers. I'm using in this example an 8, 13, and a 21 EMA, right? And there's a couple of ways to look at that. One is, how are they correlated, right? Is the short moving average on top of the middle one, on top of the last one, and so forth, or are they all flipped inverse? And where's price relative to that, right? And if they're all bullishly correlated and price is trading above, then you look at what's the slope of the moving average. And obviously here the trend is going higher, right? And then I use a longer moving average, and all that does is serve as a directional screen. and that's kind of your crossover strategy, right? So here you can see the moving averages cross below the longer term moving average. They don't get back above until here. Here they cross back below again, right? And so if you're using a strategy like this, you kind of use the longer term moving average as your directional indicator, meaning as long as price and moving averages are below the long term one, then I'm either doing nothing or I'm looking to go short, right? Because you're trading with the momentum. Here, obviously, there's a bounce, but there's no long signals issued because you're still below the longer term moving average. And it's not until you get back here where the moving averages cross, and then you start to see some buy signals issued, and then of course your crosses back over. And so that's kind of the basic moving average crossover strategies. There's a lot of different variants that you can do. You can add filters like oscillators and all that other good stuff here. But a simple trend following moving average crossover strategy, you know, you're looking at that. I've added a couple of extra filters on here. So for example, the buy and sell signals, there's basically two of them. One is the crossover. The second one is bullish and bearish engulfing candles, right? Which that's what these little red ticks are here, the white ticks there. And so it's just a different way of kind of giving you an extra signal there. So, but yeah, that's, you know, that's the whole concept with moving average crossovers. When I was looking at the big picture weekly chart for Bitcoin, that also came in very handy. And in that scenario, and I mentioned this in a couple videos, I used the 10 and the 22 EMA. And you can see here, very big picture. This is the weekly chart now, right? So looking at the 10 and the 22 EMA, here they crossed over bullish, way back here. They stayed bullish the whole way. And here they crossed bearish, right? And they stayed bearish the whole way. And here they crossed bullish. And so you've only had 3 signals, but it's really marked some major turning points in the broader scheme of things, right? So back here you saw the big crossover remaining a confirmed bull. Here things rolled over and they confirmed what we were already seeing, right? The big smackdown that had begun in 2018. And then of course back here, again, they're confirming what you're already seeing, right? We all saw the big breakout over 4K, and sure enough, 3 weeks later, the moving averages confirmed by crossing bullish, and then we saw the next move up to 14K, right? And so if you wanted to take a very slow, big picture point of view, don't care about the wiggles, right? That's something you would look at. You would look at something like a longer term weekly chart and find a trading strategy that kind of fits with that. You don't need to go too fancy with all the indicators, right? So just something to note there. Hidden divergence, you know, that's a good one too. Hidden divergence. So there's bullish, bearish divergence, and then there's kind of the hidden divergence depending on the RSI. And do I want to go down that path? There's more examples here. I got to try to find an example. But basically, so a normal divergence is when price makes a new low, and you know the RSI does not, or the MACD does not, right? That kind of shows you momentum's waning. The hidden divergence is a little bit differently, where price is moving in the direction you're thinking, but the MACD and the RSI are diverting kind of a different way. You know, like this would be lower, higher type of thing. So I don't know if that makes sense. All right. Oh, the suit against Veritasium. That's a coin that was so shilled, and I am proud to say I never owned any Veritasium. I don't know why it was. I know the founder, people were like really impressed, but it's kind of a bummer just to see like so many coins. You were talking about like you know, Link being dumped on the market and all that stuff, and it just kind of makes you wonder like, what really is the long-term valuation on a lot of these tokens when, you know, a lot of them were utility tokens, and even then you kind of wonder, what's the point of this token again? You know, do I need it to run on the platform? No, you don't. Do I use it to do something with it? No. Is it considered part ownership of the project? No, it's not. You know, it's kind of like, okay. And it just, a lot of these tokens, it makes you really wonder, like, what's the long-term valuation picture going to look like for a lot of these names? Even if the project does succeed, right? Does that necessarily mean that the token is going to be worth that much, right? So that's what I'd be looking at. What are those two moving averages? That's the 10 and the 22 EMA. So the exponential moving averages. All right, let's go back to Link here. So looking at Link BTC here, there's a couple of things that I've been watching on Link. Not this one here. Link dollar. Link dollar. Not this one. Link USD. I'm trying to find the chart I already have marked up. Sorry. So looking at Link USD here, and again, we've looked at this one a couple of times here in the last stream. This little blue zone that I have highlighted, right? That was the prior breakout point, that big rally that we saw up to $4.50 before the big smackdown. And so far, that level has proven to be a level of support. It's also interesting to note that, you know, this longer term moving average is now starting to catch up right to that point. But at the same time, I'm not seeing any sort of follow through to the upside, so I'm not too bullish or bearish on it. In fact, I think it looks a little bit more vulnerable than not, right? It looks like this is a little bit of a distribution zone here being propped up above that support. But if it breaks below that, you know, it could very quickly go from that $2 mark, you know, to $1.60 or so, maybe even $1.40. So I'd be cautious on Link here. Of course, on the upside, the level that I'm watching, you know, near term, maybe 260 is kind of that early indicator. 270 would really start to show some action. Would definitely want to see some volume come out if you know, if it spikes right through that resistance. But for now, it remains range bound. I would say it has, you know, a little bit of a slight bearish bias to it. So just definitely something to watch here. Link will be worth $1,000. Hey, I hope there's probably a lot of people that hope that, so we'll see. That's funny. I can see your sarcasm there. I like that. The 10 and 22. Thank you for answering that, Michael. Yep. Do you have an indicator for the widening spread of the moving averages as a signal of overbought and oversold? In fact, we do. It's called the MACD. These MACD histograms are exactly that. They just simply tell you the spread between two moving averages. And in fact, my MACD setting is 10, 22, 9, which matches my moving averages. So the MACD will tell you that. Good question. Who knew I knew so much about indicators? All right. Can I go on a rant? Indicators? I know my chart's like really messy here, so I probably shouldn't go on this rant. But man, I see some charts with like 20 indicators. You don't need that many indicators. Okay, that's all I'm going to say. Let's see here. Let's keep going. RAN. I haven't looked at RAN. Let's see. RAN BTC. Apparently, we looked at this one here recently. It's interesting to see these. The chop. Man, this one's pretty wide and loose here on the daily chart here. Quite the pullback coming in here, and you know, you've got a moving average that who knows if that's going to hold. Really, the hard level is this price level way down at 640. That's really the level I'd be watching. But in the near term, maybe if it breaks trend on the 4 hour, you know, maybe a break above the trend there. You could say, yeah, maybe that's a falling wedge type of scenario on that 4 hour view. So I'd be looking for a break above trend, but for now, certainly the last several days, last several weeks, the momentum is definitely downward. I'm a whale node insider. Yeah, I wish. All right, let's see. Digibyte. There's a name from yesteryear. Digibyte on the Bittrex. Oh my god, look at this hourly chart. Good god, there's no trading on Digibyte hourly BTC. Oof. Man, yeah, it's not too hot there. Let me see here. Oh, that's daily. Sorry, wrong chart. This is the daily. Not a whole lot, my friend. What is the? Oh, I closed down the market cap. What is the market cap of Digibyte? Not a lot of volume. You see those big wicks. Yeah, we looked at BAT. I like BAT here. It's probably one of the better names that I'm looking at today. There's, you know, like I said, there's still slim pickings. We had a strong alt day yesterday. There's quite a few names moving. We're seeing some kind of pullback entries potentially setting up. BAT's one of those. I'm liking this pullback. Here's the hourly chart here on the bottom right. I'm liking this pullback. Definitely keeping an eye on it. It's pulling right into the prior high right here. So, you know, definitely something to watch. I'd like to see it hold here and then spike through on some volume. But yeah, it looks good. Same thing on the 4-hour chart, right? Coming right back to the breakout point, pulling right back. The 4-hour altcoin signal indicator is signaling a little bit of a buy signal there, but there's still an hour and a half left on this 4-hour candle, so that could change depending on what the candle does. But yeah, that's definitely one of the better looking ones here in terms of a potential pullback entry. When I say one of the better looking ones, I mean talking about short term, right? Look at the daily chart. I mean, it's not exactly the better looking one on the daily chart, so just, you know, it's all relative. What plugin do you use to have multiple charts? This is TradingView. This is just TradingView. I believe, correct me if I'm wrong, I think you gotta have the premium versions maybe. And depending on which one you have, like, I think if you only pay for a certain level, like you get the first 3 options, and then if you pay for the next level, you get the next options. And I think you can do 8, right? 8 charts on one thing, so there's a lot. And then of course it's pretty cool because you can actually, you can link the symbols, or you can link the time frames, or the drawings, that sort of thing. Like, so for example, when I'm doing my stocks, generally I'll have multiple charts on one screen. I'll have like 2 or 3, but different symbols, of course, and, you know, just kind of go from there. But I use the same time frame. So, but that's TradingView. It's a nice feature. All right, so yeah, BAT, Monero. Somebody mentioned Monero. How's Monero looking these days? Let's see Monero Binance on the Monero BTC pair here. Let me clear that line out. Oof, that daily chart looks pretty rough, to be honest. I mean, it looks like it's holding on by a thread right above support, maybe even a little descending-ish pattern. So that daily chart doesn't look too good. Needs to get out of that range. Needs to really break out above 9,000 or so and start to hold. 4-hour chart just sideways, choppy. I mean, not a whole lot to do there. Which time frame chart do I recommend for beginners? Definitely not minutes. Or we're talking crypto, I'm assuming. So definitely not minutes. Probably not even hourlies, to be honest. Because there's certain coins where the hourlies just don't help you. Low liquidity, low sat names, they're just going to drive you crazy. Even Bitcoin hourly drives me crazy. Unless the momentum is really strong, it's pretty rare that I'll zoom into sub hour charts. I know there's some guys out there that they talk about, oh, on the 5-minute oversold, on the oversold bounce on the 5-minute. Like, okay, that's not really my style. So it just depends. If you're a newer trader, I would say maybe 1-hour to 4-hour charts, somewhere there, you know, one of those extremes. I would probably say 2 to 4-hour charts, and then just stick to that, and then use the daily chart as kind of the bigger picture view, right? So what's the broader trend? Is there a bigger daily moving average or something that's going to act as resistance? And go from there. What you don't want to do is pick a chart and then do this, right? You don't want to go, okay, let's look at Link, and then Link weekly, Link daily, Link 12, Link 4-hour, Link 1 hour, Link 30 minutes, Link 5 minutes, and then figure out, okay, which one do I like best, and I'm going to trade that, right? Have a strategy. I'm not against any time frame, right? I mean, if 5 minutes is your thing, that's cool, but have a strategy, right? And if you're trading 5-minute charts, then like the daily chart doesn't matter a whole lot. If you're trading 4 hours, yeah, it probably matters, you know, that sort of thing. So use a time frame. I covered this a little bit in my course on the multiple time frames and all that. Which course is that? I'm trying to think which video that is for those of you that have access to it. But I talk about the triple time frame, right? And the whole idea is whatever time frame you do choose, you basically go +1 and then -1 divided by 4, right? So for example, if my core trading time frame is this one right here, this 4-hour chart, then I will go +1 and look at the daily chart as kind of my higher time frame. And if I want to, you know, make a tactical entry, so I like the 4-hour chart, I'm basing my whole strategy off of the 4-hour pattern, but I may dial down to the 1-hour chart as far as a tactical entry point, right? So I may say, okay, I like the 4-hour chart. It's giving me a buy signal, but then I'll zoom into the 1-hour chart only for the purpose of, is it like really overbought or really oversold? And maybe I'll just wait for this to hit the moving average on the 1 hour and I'll get in there, right? So that's the idea. But the whole idea is you have your kind of your base time frame, and then you have one above and one below, and that's it. So if your base time frame is the 1 hour chart, the below it could be a 15-minute, to kind of be a little bit more tactical, and your above could be the 4 hour. If your base time frame's the daily chart and you're only swing trading or position trading, then you're looking at the weeklies and you're looking at the 4 hour, and that's probably it, right? So that's my recommendation. There's obviously more to it than that. There's, you get a feel for price action. There's sentiments. There's news. There's Trump tweets. There's all that stuff in terms of what else will drive the markets. Sometimes technical analysis works. Sometimes it's overpowered by silliness and market behavior, and it is what it is, because at the end of the day, that's all technical analysis is. It's just a picture of the psychology of the traders in the market at the time. And if news breaks or something happens, that changes things, right? So obviously, it's going to change things. So if you're trading strategies on BitMEX, you're probably using leverage. So in that scenario, you probably want to work on a lower time frame and kind of have a little bit more scalp type strategies, and maybe not hold for like the big swings. They may work, but generally you're kind of lower time frame when you're trading on margin. So for example, like when I'm trading stocks, right, like I'm living on the 5-minute charts when I'm trading stocks, but that's because between 1 minute and 5 minute, especially at the open, you can do a lot with the 5-minute chart, right, and a 1 minute chart, especially when you're trading stocks on margin, right? Like these, every 10, 20, 30 cent move means a lot, right? So at that point, it makes sense to trade this. And I do look at the bigger picture, but that's really more to establish potential price levels where things may reverse or turn from. But that's my window right here. Is I'm living on this time frame, and that's because I'm in a trade for very, very little time, but I'm trading on margin too. So totally different strategy there. All right. I've really diverted us here. Let's keep going. Let's do a few more, guys, and then we will wrap it up, do the weekly wrap up here. Looking at Tron. Oh, my goodness. Tron BTC here. Maybe finding a low. What is that? Call it 160 on the BTC pair is the low that it's trying to establish. Needs to hold that. 4-hour chart. Still not looking too pretty here. Let's look at Tron USD. And I cover USD pairs because sometimes, like if you're on the sidelines sitting on cash, this might be the angle to come in from. So Tron USD, not a whole lot. Some might argue there's a little tiny double bottom forming on this daily chart. Maybe you wait until it gets above 0.185 on the upside, and then that could potentially lead to a bounce trade. First target would be 9.5, and then the big target here about 215. And of course your stop would be the low. I don't even know if that's a 2-to-1 ratio. It's probably not even worth the trade there. It's a 1.5, so it's not exactly a good risk reward scenario unless you make the stop a lot tighter, maybe the low of the candle or something. That you're at a 2.5. There's better options in my opinion. Oh, let me see here. Theta. Theta's been a good one. It has been on the move lately. It's been tradable. That's for sure. Had that nice rally. Look at this pullback. Interesting to see Theta's been hitting that moving average, though. Bounce off of it there. It's pausing right here, right below it. But, the last, what is that? Basically since August 8th, I mean, it's been on a very nice upswing here since that low we saw here. Didn't get a buy signal on it until there, and then some additional ones here and here, but looks like it maybe is rolling over. What was the other one that showed up here? It looks like Michael said 1. Let's go to the dollar pair. It is kind of flagging out here at the lows. It's interesting. You can see it here with the symmetrical pattern starting to form. 4-hour view is probably the time frame for this guy here, just because this one moves pretty wide and loose. 4-hour, even 1-hour view is okay, right? Like that's a 10% trade there. 4-hour view probably offers better opportunity. That's a 50% move there, and that's a 30% move there. So that probably be the one. This is the wide and loose name. How's it look on the BTC pair? Maybe. Looks like it's breaking down here a little bit on the BTC pair. I saw a lot of names do that here. They were looking pretty good yesterday, and then when Bitcoin spiked, a lot of these names just didn't keep up, which, I mean, as we know, that's kind of been the story here lately. Matic has been another one that's been holding up pretty nice. 4-hour chart still kind of consolidating here. Watch that lower trend line. If it breaks, probably not a good move, but this is potentially a little ascending triangle starting to set up here. And in fact, I would have probably, if I was looking at this, I probably would have been in already, because I like to get in when they break near-term resistance. So that would have been a breakout yesterday, and then it would have been pulling right back. So below this trend line / 50 moving average, that'd probably be my stop point if I was in that trade. But if you wanted to wait for the bigger breakouts, you're looking at up here. What is that, 170-ish? Matic. What were some of the other ones here? Do I agree with Ivan on Tech when he says pizza and sushi is a scam? All cheap carbs, little protein, big price. No, it's not a scam. Because some of the best meals that I've ever had at a restaurant have included either pizza or sushi. I'm willing to pay for that, even if it means paying a lot of money. I mean, a good pizza is worth every dollar, to a point. But, I mean, come on. I've never spent $100 on a pizza, right? So, pizza. Now you got me hungry. It's lunchtime here. I think I might go for some pizza today. I eat pretty healthy, but on the weekends, it's all bets are off, man. Pizza, burgers, wings, I'm all for it. So, that's a good question. What do you weigh as the highest when it comes to signals? Good question, just because, and again, it's going to depend on your strategy, so I hate to keep saying that, but your time frame and all that will kind of depend. But easily, the first one is obviously price, right? I see so many indicators out there. Price, hands down, like if you can learn to read price action and even candlestick patterns, like you can get by quite a bit with just price, because after you learn to get a feel for the markets and price action and all that stuff, you'd be surprised at how much you can get done with just that. And the indicators just kind of are more like little confirmation tools that kind of help you say, yep, that's kind of what I'm seeing in the price action. But yeah. So with that said, price and then volume. For me, I would put a moving average up there. And again, that's just because it helps with kind of very quickly spotting the direction of the trend and whether or not the buyers or the sellers are in control. It makes it really easy to do with and not just one moving average, but generally I use a moving average pair. And I talk about that in my indicators course as to why I use moving average pairs. And then beyond that, some of these are probably the other ones I would use. If you want an oscillator, you don't have to have several of them. Just have one, maybe two. You don't need the Williams percent and the stochastic RSI and the MACD and the RSI. I mean, just pick one, right? Pick one or two. And then, beyond that, maybe the MACD, maybe pivot points. I use pivots in the stock side of things just because they really work. They matter. The big traders, the algos, they use the pivots, so hence I use them. But it just kind of depends. I mean, If you want a sequential indicator, if you're a Ichimoku guy and you personally would just rather have the cloud and some volume, then that's great, right? I mean, there's nothing wrong with whichever ones. The thing to remember about indicators that people very often forget is indicators have a optimal use, in terms of best time, and sometimes they're better and sometimes they're not. What I mean by that is, for example, in a range-bound market, right? Let's find a range-bound market right here. Right here. You guys all remember this, right? Let me scoot into that. You guys all remember the choppy summer that we saw last, August, September, and kind of going into October, right? During these markets, moving average crossovers strategies, they suck, right? They don't work because it's over and it's under, it's over and it's under. That doesn't work. Most oscillator strategies don't work, right? Oh, it's overbought. Oh, it's oversold. It doesn't matter. It's going sideways. RSI, right? Middle of the range because the price was just going sideways. MACD did nothing for you. TD sequential indicator did nothing for you, right? What did work during this time frame? Some range-bound volatility type indicators, things like the Bollinger Bands or maybe the Keltner channels. That kind of worked. But at the end of the day, the most basic thing is support and resistance. And you could have just as easily said, I'm not doing anything until price breaks down, I'll go short, or price breaks up, I'll go long. And that's usually the best thing to do in a range-bound market, is to just wait it out and use support and resistance, right? So that's what I'd be looking at here. BTC looks like it's breaking higher. That 5-minute chart was sitting tight. It was just ready to pop. It's sitting there. And so you have to know when to use the indicators, right? Like in a trending market, for example, when you're doing this, right, when the market's going like that, then oscillators are helpful because when they hit oversold conditions on the pullbacks, those are good places to go long, right, on the lower time frames. And vice versa, right? Like if you're riding an uptrend and your oscillator says, oh, we're overbought, it doesn't mean as much, right? Because it can stay at overbought for a while. And in fact, it means more positive than not, because it just kind of shows you the strength of the market, right? So if you're in an uptrend, oversold helps you way more than overbought, and vice versa. If you're in a downtrend, overbought helps you a lot in terms of finding a short entry versus oversold. It could stay oversold for a while. So I know that's a long answer, but you got to know when to use the tools, my friends. It's like trying to say, oh, I got a hammer and I'm going to use it for everything, when sometimes a saw or a screwdriver is a much better tool to be using in that scenario. Same thing with the indicators. They just kind of all depend. Elliott wave, I'm not a big fan of Elliott wave. I know some people that are and that use them. To me, they're just very hindsight, so same thing with TD. It's just more hindsight that I'm more comfortable with. I mean, I'd pick, well, I do pick a lot more other things before I go down that path. So, but that's just me, right? And some people are really good with the Elliott wave and they like it. So more power to you, right? There's no right or wrong. There's a million ways to do this thing. The charts are driving me crazy. Should I take a holiday until the end of September? Probably to the end of August. I think September is going to be interesting. But yeah, I mean, the charts can drive you crazy. Even if it's a busy time, you got to take a break. Especially in crypto, when it's a 24/7 market, good God, you got to take a break. It'll drive you nuts if you don't. Which is why when I get those opportunities like I did last weekend, where I can literally check out, there is no cell phone service, there is no Wi-Fi unless I'm willing to drive, then you kind of don't worry about it. There's no Twitter, there's no charts, there's no price action, no apps that I can link to my exchanges. It's kind of nice. You got to take time off. Even on the weekends, I slow down quite a bit. I used to trade a lot during the weekends. I don't as much, just because by the time Sunday night rolled around, I was exhausted, and then Monday morning was here, and I was like, oh, here we go again. So you gotta definitely take care of yourself. It's a long-term game. What do I think about harmonics? I don't use them. I know there's some basis to them in terms of the patterns. They're popular in Forex markets, which could be useful in crypto trading because it's very similar. I don't use them. You know, I use Fibonacci quite a bit, which harmonics do have a part in, or do use, but I just don't use them a whole lot. It's kind of like patterns, right? I mean, they're kind of subjective, you know, just like any chart pattern, right? Like I draw some lines here on this chart, but this is a little bit subjective too, right? This is me saying this is where the line goes, right? Yeah, it's a mental marathon. There is that sense of always wanting to trade, checking the charts first thing in the morning, last thing you do at night before going to bed. I mean, it's addicting, and it's like there's FOMO and there's all that kind of plays into the psychological aspect of trading and drives you to watch the charts and to trade and to take a position. And if you're not in a position, you feel like you're missing out. Like there's a lot of psychological challenges when it comes to trading. It's definitely not easy. I wouldn't recommend it. I wouldn't recommend it. Okay. All right, my friends. I'm kind of reading the comments. I think we've got a few others real quick, and we'll look at the charts. Bitcoin is popping here a little bit. VTC, VChain. VTC, remember that? Bitcoin? What was the name from yesteryear? Yeah, it's always good to bounce ideas off other traders and investors, for sure. You definitely gotta, keep a community. Definitely talk with other people that are doing it too, because it's always good. You can get a little lonely sometimes if you don't. Interesting here. Yeah, I'm reading the comments. Sorry, should be looking at the VChain chart here. Looking at the daily chart again. VChain, I had high hopes for this guy. It's just drifting lower. You can see the daily trend. Still, moving averages are just trending lower. Price is trading below them, bouncing into it. It's making lower lows, lower highs. It needs to start changing that pattern. So what I'd like to see this guy is on the daily chart get above. What is that? Call it 4,800, rough 4,830. That would also help get it above the 22 EMA and maybe start establishing a higher low at that point. If you're trading the quick trades, the hourlies, you can make an argument for, hey, this is looking like it's about to break out here on the 1 hour chart. That's probably more of a scalp trade at that point. Any position do you see benefit for taking on BitMEX? I'm not sure I understand the question. Yeah, we covered gold mining shares here. Yeah, that's a good point, Dan. You raise a really good point because people often forget that that's probably the single biggest mistake traders make, and that's when it comes to position sizing. If you're new to trading, or if you're kind of still like, even if you're not new to trading, but you're not really consistent yet, you're not consistently profitable, or your cumulative losses far outweigh your cumulative wins. If that's a challenge, I would highly, highly, highly recommend dropping your position size, because position size is a make or break. Because position size is a subcategory of risk management. And when you're managing your risk, you got to manage your position size. If on one trade you take a small position and on another trade you take a big position and that trade goes against you, it really messes up the P&L. And it hurts your consistency, right? Because then if every trade, one trade you make 100, one trade you lose 500, another trade you lose 300, another trade you lose $10, right? Like, you're not going to be sure, is it your strategy that's the challenge? Did I misread the price action? Was it just a normal part of the probability of some winners and some losers? Or is it my position size? Because your position size is going to throw off the metrics. So you definitely got to be, gotta maintain that. And the thing with position size is you kind of care a little bit less about the trade, which is a good thing in some ways because you're not so stressed about it. You can think a little clearly. You don't have as strong of a bias. You're kind of like, okay, if it works, it works. If it doesn't, no big deal, right? And at that point, you make better decisions just by default. And that's the thing with trading, right? Especially if you're trading like professionally, it's all psychological. So like if you need to make a living from trading, you're probably going to be trading way too big, and you're going to be way more stressed out, and your decision making is just not going to be there, right? When you kind of take a step back and you're like, I really don't care. If it works, it works. If it doesn't, it doesn't. And I'm going to follow this strategy. And right now I'm getting a buy signal. You'll be surprised at how well you can do with smaller position size. So that's a good point, Dan. Dow 500. Man, what time is it? 12:10. Let's go look at the market here. I forgot the stock market's still open. I closed up that side of trading today. I did the ooh, look at that. So I did the quick trade earlier and decided to call it a day. I wasn't gonna ride that down, but that's quite the man. Just no bounce in sight. Yeah, my trading today comprised of that. I started late. I didn't trade the open, so I basically traded this time frame here, and then I said, well, that was fun. It was probably not even that. It was probably more like this time frame. I literally traded an hour and a half today, and then I was like, okay, I'm done. I'm good. And yes, I was short. Luckily, it was lucky break. Honestly, I was shorting a couple of stocks, and then the tweets came out, and I said, well, not gonna press my luck. I'm good. Try to punch myself in the face every time I feel FOMO. I know. You know what I always tell people? if you have FOMO, like, just go buy $10 worth. Like, get it out of your system. Okay, I'm in the trade. Doesn't mean much. I'm in the trade. Got a little bit exposure. It helps. It helps with the FOMO. The thing is the psychological need to be right and need to be in a trade all the time, and I totally understand it, because I'm a trader too, and I feel the pressure of, oh man, I'm missing out. The market's moving without me. You know, like, there's that pressure. Or when you're not in a trade, it's really easy to just like scan the charts. I guarantee you, I could scan the charts and I can find a trade to be in. I mean, that's just the way it is. Like, if you're looking for a trade, you will spot something that goes, oh, that looks really good. Like, I should just jump on that. So you gotta really fight that. You gotta stick to a strategy or two and play them out. Here's a challenge, right? If you're new to trading, or if you're trying to figure this whole out, here's a challenge to you. Pick one or maybe two strategies, just one or two, and only trade that for like a month or two. Don't worry about everything else. Don't worry about, oh, I'm missing out on the move. If it doesn't fit within your strategy, your trading signals, like, okay, when I see this is the one or two setups that I look for, and that's it. If it doesn't fit within that, just let it go. Don't worry about it trading it. Just wait for your particular setup. And if you don't get it, then you don't get it. But just wait for your setup. Try that for a month or two. You'd be surprised at how much more clearly you can see. Now, of course, once you get better and you're a little bit more experienced trading, you can add more quivers, if you will, right? You can add more tools to the belt. And you can say, okay, not only am I trading reversal trades, but now I'm trading breakout trades, and I'm trading this pattern and that pattern, and I'm trading a moving average. You know, you can get a little bit more able to juggle the various strategies without kind of just being so impulsive and reactive. So that's what I would totally try to do, right? Like, pick one or two, whether it's moving average crossover or whether it's a breakout trade or whether it's whatever, right? Find a setup that just makes sense to you. Like, hey, I can totally understand that setup, and if I spot it, I will feel very confident trading it. Just try that for a month. You'd be surprised at how much better your trading gets. And then master that setup and get really good at it, and then move on to the next one, right? Like when I trade stocks, that's generally what I do. Like, there's a million ways to trade stocks, but I have like my two or three that I just look for, and if I don't see them, then so be it, right? You missed the move, no big deal. You didn't make $2 million over lunch, no big deal. Okay, it is a big deal. But I feel the pain. I feel the pressure. I know what it's like. I'm with you guys. Okay, I think that's going to be it today, my friends. We covered the BTC stuff. We covered a handful of names. You know, there's some good alts kind of setting up out there, but it's kind of a caution market at this point. I'd be more inclined to take the pullback entries than I would the chasing the big moves higher. It's just the market we're in right now. There's some potential reversals showing up in the altcoin land, but we are far from any sort of alt season. Some of the names that I would cover, some of the better ones that I kind of are on my radar today: basic attention, BTC, looking for a potential pullback entry here. Short time frame, of course, daily chart still looks ugly. Waves, maybe. What was some of the other ones here real quick? There was BAT, Waves, 0x was looking pretty good, needs to pull back, although it is pulling back already. Cardano, I was watching that one here, and what I was liking about Cardano is it was setting up this little bit of a wedge type setup here. Potential breakout pattern, so just watch that guy here on Cardano, this Cardano BTC. If you look at it from the USD side, you know, again, similar type action, very symmetrical in nature. So if it starts to edge out, make a higher high, good setup here. Probably the 1 hour chart near term is what I'd be watching, a break above that downtrend line. Daily chart, again, ugly. Certainly nowhere near the type of action that we want to see longer term, right? You know, this is what we want, right? We want to see this, right? We want to see these higher highs, higher lows, sustained daily moves, right? We're not there yet. So there's a few options out there. Some things definitely setting up as we head into the weekend, but I'm sitting tight and cautious, moving slow. I'm not going to FOMO right now at this point. Icon, sorry, certainly holding up well, kind of consolidating here. So here's the 1 hour chart, definitely sitting tight. If it starts to break out, maybe that's a good one to look at. IOTA. We need to look at IOTA today. IOTA is another one that's potentially reversing, setting up a pullback entry here. So looking at, you know, pulling back above the breakout point, right at the 10 EMA on the 4 hour, maybe even the 22, right? That little zone there would be the ideal kind of breakout entry level, as long as it holds above the line. Again, same scenario on the 1 hour chart. You can maybe just take a look at the downtrend, and then when it starts to break above, that could be a signal there. So those are probably it. There's a handful of names. I'm sure I missed some. There was a few. What else? I'm trying to think off of memory here. I posted a few on the Slack group in terms of, I posted a list. I think Engine was one. Mentioned 0x. Of course, all the names moving strongly here today. Neo was kind of wedging in there as well on the 4 hour chart. So real similar pattern here. We'll see if it breaks out. WAN chain. Okay, let's go take a look at WAN. So those are a handful of names, but oh yeah, look at WAN chain broke out today. Dang, nice move. Who mentioned that? Somebody mentioned WAN chain. They said keep an eye on WAN chain here. They mentioned that yesterday on the Slack group, and nice, good move. Let's see, Raven was looking okay. Aeon, there was another one that I posted in the group yesterday. Let's see, ARN maybe. There were some small cap names that I was like, yeah, I don't really like trading them, but might be worth watching. Quant, interesting setup here, right back to the moving average, low volume name. All right, cool. All right, guys. Hey, thanks for being here. I wish you all a wonderful weekend, and we'll see you all next time. Take care, everyone.